So it was a dream that we wanted to be public since the company was formed itself, that time itself. It was a dream like to come and go on a public listed platform. That is the reason that, and the emotions are very high today, because our entire 12 year is coming in front of us. All the entire hard work given by us or the entire people, maybe the faith that the investor has put on us. I think everyone is flashing in our eyes, and I think thank you to all the people for the overwhelming response that we have got and during the IPO 41 times oversubscription. Thank you so much.
Yes, and it's important. I know this is, the smile on your face says it all. Let's start with business, right? So the response to the IPO has also been phenomenal. You were subscribed almost 42 times in the IPO offering. We do understand that your revenues, numbers, and your profit as well. One thing that I wanted to ask you about, what are current margins at for Baazar Style for FY24?
Yeah, our revenue was 972 crores in FY24, and the EBITDA was 14.61%, and the PAT was 22 crores. That was more than 4 times compared to last year.
Pradeep, I want to highlight margins because I do know that some part of the proceeds are going to be used to retire debt. So what I want to understand is where are margins currently at, and with the reduction in finance costs, where do we see margins go in the next maybe 1 to 2 years?
Basically, we are going to repay the loan, and our debts will be 100% zero, and the benefit of the debt repayment will aid to our margin, and it will increase our margin, and we have grown in the futures. We grow like that in the past. We grow like that in the future also, and naturally, what we have grown in the past, it will grow in the future also.
Just to add to Pradeep's point, there are two things to it. There are 2 strategies that we are working on. One is on the gross margin side, which is helping us to improve the margin expansion, and second thing is on the cost side. So on the gross margin side, because of the private label introduction, and in last 3 years we have grown by 64% in the private label, and our private label stands at a top 38%. And I think we intend to grow it with the same momentum in near future also. So that will be one of the levers for the gross margin expansion. And coming to the our approach, that the cluster-based approach that we follow, it allows us to optimize cost. So we will be, I will say the margin will be expanded on both the fronts, on the gross margin side also and on the optimization of cost. Apart from that, as he said, that we are retiring the debt, and in this current financial year, FY 23-24, the debt, the 13 crore is the interest cost, which will typically gets, I think, which will be zero once the entire debt gets retired. So I think that will have an additional impact on the PAT margins.
You're right. I mean, that's going to be significant. And I believe we will see the impact of that as early as next quarter when you talk to us, when you report your earnings. But just give me a range, right? Shreyans, I know it's a little forward-looking, but you should get used to this because you will be a listed entity in a few hours. How much are you expecting margins to expand by, and what sort of top-line growth are you working with? Will you continue to grow at the same pace that you have in the last 2 years?
So in last 3 years we have grown at 32%, and in last 6 years we have grown at 26%. I think the momentum on the revenue side, the intent will be to grow at this percentage only that we have done in past. And as I said, in terms of margin expansion from 12.4, we have reached 14.61 at EBITDA level in FY 23-24. And I have given you the levers also. And I think in 21 days, once the result is published, I will be in a better position to give you the future guidance also.
Right. Also, a couple of other things, Shreyans, and you talked about your in-house labels. That contributes 38% to your top line. Is the plan eventually to come to a stage where in-house labels are the core contributors to top line, or would you still want to sell other brands? Give me a sense of that, because I know this is a better margin business and it's in-house, so there's a lot more control in the supply chain as well.
So I think the intent will be to grow the private labels only. So in last 3 years from 22 we have reached 38%, growth of 64% in the private label side, and going forward also we see the private label becoming a bigger, I will say bigger chunk of sale will be coming from private label compared to the other labels, because that will be the growth trajectory for us.